Welcome to the Defense and Aerospace Report podcast. I'm your host, Vago Muradian. Our podcast is brought to you by Bell. Since 1935, Bell has been redefining flight. Learn more about its pioneering spirit at bellflight.com. As the coronavirus death toll in the United States continues to mount and national, state, and local governments work to reopen their societies and economies, the defense and aerospace industry is grappling with the depth of the economic impact and what the new normal looks like without sparking another deadly outbreak. Among the companies that reported first quarter earnings last week were Airbus, Boeing, GD, MTU, Northrop Grumman, Textron, and Thales. Boeing also said that it would not accept help from the U.S. government, opting instead for $25 billion in loans that would come atop $14 billion the company has already borrowed, giving it about $40 billion to manage the downturn. And that downturn is pretty sharp. According to the U.S. Transportation Security Administration, air travel is down 95%, and the International Air Transport Association, otherwise known as IATA, projects air travel for 2020 to be down 48% from what it was in 2019. Joining us now, as they do every week, to discuss what has been another interesting week are Dr. Rocket Ron Epstein of Bank of America Merrill Lynch, Sash Tusa of the independent equity research firm Agency Partners, and Richard Abalafia of the Teal Group Consultancy here in sunny Washington, D.C. Gentlemen, welcome back.
Great to be here, Vago. Thanks.
Thanks, Vago. Great to be here.
Always great to be here. And yes, it is a lovely sunny day here in Washington.
It is. So if anybody heard the birds tweeting, it's because Richard's in his garden. And if you hear clanking, it's probably because Sash is enjoying a claret. Excellent. Well done. And if only it was good drinking out here in Washington. And before we get started, our global coverage is sponsored by Leonardo DRS. Northrop Grumman sponsors our weekly cyber report and our broader cyber coverage. Fincantieri Marinette Marine sponsors our naval coverage. Elbit sponsors our trade show coverage. And Bell, of course, sponsors this podcast. Ron, start us off. Boeing had a tough week. It now has more debt than New Zealand, a $1.7 billion loss in the first quarter on $17 billion in revenue, with defense and space as the bright spots, but still 26% lower than the first quarter 2019. What stood out beyond the numbers in terms of the company's outlook, its expectations for 737 MAX and the wide-body market?
Yeah, broadly, many of the questions we were fielding from investors were a lot of our same questions. After they reported the quarter, we got a lot of questions around, are these 737 production rates right? Can they really get to the levels that they speculated? On 787, they said they'd go back to 10 per month and then work their way down to 7 by 2022. We had questions from investors on that as well. Given what Airbus said, given what other suppliers have said, namely GE in the engine market, they're almost primary supplier of engines. Their outlook for production rates seem to be a little bit out of line, I guess said kindly, with what others were saying.
Completely out of whack with what the rest of the industry thinks it's going to be. Delusional was another word that I think's been used.
Yeah, they were optimistic, clearly. Okay. However, they reported earnings, and the next day they did the $25 billion debt deal. So, like you said, they have more debt now. That not that it really matters, but it's more debt now than New Zealand and a little bit less than Switzerland. It's a company that at the end of 2018 had $5 billion in net debt, now has $50 billion in net debt. That net debt coverage is going to service that debt and then repay that debt. It's probably going to be the better part of 5 to 10 years. It's bonds, and they're bonds that have callable provisions that are not favorable to Boeing. So these are bonds that if people are buying them now, they want them for a long time. And they did it, in a stair-step fashion over 3 years, 5 years, all the way out to 40 years. So it's a whole ladder of bonds. So anyway, it changes the investment profile, right? Because they're not going to have a dividend for a long while, probably at least 5 years, and they probably won't buy back shares in that time frame either. So it changes how investors think about Boeing from just 90 days ago, really.
Sash, let me go to you for the Airbus take in terms of how the company did. It has a somewhat less rosy view, but some would say equally delusional about what the future of the market is going to be, as we've been discussing it on the program. Talk to us a little bit about where Airbus is, how they performed, what they're saying, and what you think their performance and what they said.
Our view is that, I mean, Airbus is talking about a rapid snap back in demand. They used the word snap back several times on the call. And as a consequence, they don't want to cut capacity too much because they're worried that if they do, they'll miss out on this snap back in demand, let's say sometime in 2020. They think that snapback is going to be at the narrow body end. Well, I think we all think that. And they intend to be the absolute dominant leader in that, with the variants of the A320 family, the A321XLR, the A220. They want to be able to absolutely crush Boeing when that happens. And they probably can, because these are just the better products. Here's the problem. They're not going to take capacity out. So Airbus and Boeing, on the basis of their published numbers at the moment, are going to deliver, even before we talk about the grounded 737 MAX, is well over 1,000 aircraft. The market is not there for 1,000 aircraft. It's probably not there for 500 aircraft next year, frankly. So, and the fact that they are, they've said, we've cut production once, we'll look at it again in June, but it's not going to be a big cut next time. It makes them look as if they are really much more optimistic than we think is prudent. There's also a problem here, which is that Airbus is speaking to two different sets of stakeholders, and seems to be hoping that the two different sets of stakeholders won't actually compare notes. So they're saying to the unions and to the governments, this is a near existential crisis for the industry. Guillaume Faury, the CEO, said, we're bleeding cash. This is the most serious downturn this industry has ever faced, which is utterly realistic. And then they come on a call with investors and say, yeah, it's bad, but there's going to be a snapback. We've got to keep capacity in place because we really want to be, selling a ton of aircraft when that happens. Well, one of those is wrong, but you can't have two views out there in the market like that. And I think Airbus has got to be extremely careful with their messaging. But net, both companies are, in our view, unrealistic to the point of irresponsibility about what the market will want in terms of aircraft in 2020, 21, 22, 23. They are going to overproduce. They're going to kill this market, and it's going to be a much deeper downturn until and unless they take a ton of capacity out.
Richard, your assessment, given that you've been writing a lot about this and talking a lot about this as well, and listening to what both of them, as well as others in the industry, have been saying.
Yeah, I think everyone's still living in a delusionally V-shaped world, and I keep coming back to the some of the initial reactions that came out about this crisis back in March, in particular, ICAO, not to name names, but okay, ICAO. And they said, oh boy, in a pessimistic scenario, the snapback will happen in June, otherwise May, for our baseline. Now here we are, of course. And I think, unfortunately, people are taking the same incredibly optimistic V-shaped thinking and applying it to, the second half of this year. That's when we'll see this amazing snapback. In other words, they're living in a world where the virus does not, in fact, run the show. They're living in a world where, I don't know, all of a sudden, governments just determine, okay, everyone back to work now. All is good. Everyone flies. And even IATA, which does amazing work, and I think is an extremely sober and conscientious organization, still has that 48% number, which, of course, is, when we're 95% down now, they're anticipating a hell of a great snapback in the fourth and possibly third quarter. I don't really think many of us believe that, right? I mean, the real number for the year is well into the 50s, probably 60s, and for all I know, perhaps the 70s or 80s. It isn't good. And I think a lot of people are coming up with these production plans on the basis of that. Airbus, it's almost defensible because they've given everybody a 3-month time horizon. And they said, June will be when we decide what happens next. So Sash's sort of clashing messages is reconciled by, June, talk to you again in June, and then we will reconcile. Boeing, that's really weird because they gave something like a 3-year time horizon in the case of the 787. And it's like this fictional universe next year where there are plenty of healthy airlines still taking 9 or 10 787s every month, 3 777s every month. I mean, just truly an unlikely universe.
Well, what happens to fill, right? I mean, so we just keep using the airplanes that we have, and a lot of them just stay parked for longer, right? I mean, isn't that, and who ends up even making any money in this, right? I mean, because if you can't believe those assumptions and nobody's got good numbers, and I should point out that it's the, for anybody who doesn't know, ICAO is the International Civil Aviation organization that's part of the United Nations. But at the end of the day, like, who ends up making any money on this? And because we're going to talk in a little greater depth in a bit on what the future of air travel is, but I want to get your sense on, I mean, doesn't the supplier base dictate to these guys eventually, like, what they end up building? Like, isn't there a rebellion by guys who actually haven't maybe gotten $25 billion in market financing and loans at unfavorable terms?
Well, let me jump in quickly. I mean, I don't think it's a rebellion. It's just a reality, right? I mean, if they don't have the cash flow and the wherewithal to manufacture what they need to in the supply base, they just can't do it. So ultimately, part of that 25 billion, if Boeing's really going to try to build those airplanes, will have to end up in the hands of suppliers. So if the suppliers are paid for what they do, they're incented to do it. Then in the end, it just always gets back to the question, who takes the airplane? And there's only so many airplanes that'll come off the line with some form of financing and go immediately into the desert. And you can do a sale leaseback trade. You've been seeing some airlines do that to raise some capital in the short term. United, it was I think discussed in the market that they did a couple sale leasebacks with one of the Chinese banks, and they actually sold the airplanes for more than they got them for, and that was an immediate source of cash above and beyond sort of the sale leaseback. But I mean, you can only do that for so long. If aircraft keep coming off the line and keep going into the desert, I mean, then the party slows down, and then that's the real thing. I think when you look at Boeing's rates, you do have to bear in mind they stopped producing. So on 737, they got to kind of slowly get up to a rate. We'll see how long that takes. And given that it's been a cold line now for almost 6 months, right? And they haven't delivered one for over a year, it's going to take a while to ramp up. And I would imagine they'll crawl really slowly. I don't know if people noticed, but they did complete 50 airplanes in the quarter, right? So now they have an inventory of 450 airplanes, right? At the end of the year, it was 400, or I mean, at the end of our last quarterly update, it was 400. And then in this quarter, we found out it was 450. And the 50 additional airplanes were aircraft that were in WIP. So now they have an inventory of 450 that they have to clear before they deliver anything new. So bear in mind, as we all know, it's 450 sitting in inventory. I think it's like 452 to be exact, plus the 390 some that got grounded. So you have almost 850 airplanes that have to go back into service before anything comes off the line. Even in a good year, that's a lot of airplanes. And given the current environment, that's just a humongous mountain of airplanes. So we'll see how it goes.
Sash and Richard, real quick before we move to the next topic.
I think a very quick thing, who's going to make money on this? In the short term, no one. In the medium term, let's say 12, 15 months, maintenance, repair and overhaul companies will start to see a recovery. And the reason will be that airlines won't want to take new aircraft, but some of the aircraft that they've grounded, if they're going to get them back in the air, they're going to need to do some sort of overhaul and maintenance on them. And they'll be the ones who, in our view, will turn up first, but from a very, very low trough.
I'm going to gently take exception to that, channel my good friend Kevin Michaels and say there's a bit of an aftermarket bloodbath coming, both because of utilization, a lot of destocking of inventories at airlines, plus an avalanche of used and serviceable material from the retirements. This does not look like it's going to be a great market environment for the aftermarket for some time now. What I will say is really nobody in the short and medium term. I mean, but on the other hand, this is a long-term game, and long-term players who invest in the future of this business will be rewarded when this market does come back, and it will come back. It's just going to take patience. And in the meantime, yet again, Warren Buffett, when the tide goes out, you see who's swimming naked. People who can't wade through the next 2, 3, conceivably 4 years of red ink, well, they'll be gone, and people who take a long-term view are going to be rewarded.
Well,
Yeah, and note that Warren Buffett's just sold all his airline stock, so he doesn't think airlines are going to be where he's going to make money.
It's one of my favorite quotes of all time, and the second one is, "Everybody's got a plan until they get punched in the face," from that great strategist, Mike Tyson. How do we travel from here on out, right? I mean, the FAA.
Can I add just one maybe a little provocative thought about who makes money in this? And yeah, I'm reminded of after September 11th, back in 2001, the 757 was supposed to go away, right? Not too far after that, right? The line was shut down. And if you look at investors in the aircraft community who actually invested in 757s and got them remarkably inexpensive at the time, they did really quite well. So meaning, if aircraft traders play their cards right, and I would say the industry consensus is things like 767s are going to go away, there might be an interesting trade on the 767 ultimately. If you have 76s that are kind of, like, how can I say, younger 767s that are in decent shape, and the thinking is that they're going to go away, maybe they come back, right? So there might be a little bit of a contrarian trade on aircraft that people think are going to go away forever that don't end up going away. So just a quick thought.
So what does the future look like for air travel, right? I mean, at this point, everybody is talking about opening up. The FAA has just mandated masks, which is kind of way the hell too late. Center aisles are supposed to remain vacant. Interior makers and airlines are floating a number of ideas, from kind of very stripped down service, even in business class, putting sort of safety above everything else, right? Taking temperatures, cleaning incessantly. But I mean, the one reality remains that if you have one sick person on an airplane, the chances are very good that almost everybody on that airplane is going to be affected somehow. So what does travel look like, and how does it change the fundamental economics, given that budget carriers, and Richard, I want to give you running room on this, right? You wrote about aviation safety and why it should be traded on. But one of the points you made is that it's the discount carriers that are going to get completely clobbered, right? I mean, the Ryanairs are the ones who are packing every available person on there to give budget pricing. What does this industry look like?
Yeah, thanks for asking. And
you wrote a great piece for Slate, by the way, so I suggest folks check it out.
No, really appreciate that. Thank you. And yeah, my big concern is that this is the easiest way to see carriers break the code. As an industry, we don't compete on safety. And the last thing I want to see, I don't think anyone wants to see, is this dystopian world where you see a bunch of airline ads saying, we check your temperature, we give you a nasal swab, we have seating that or HEPA filters or whatever. Instead, I think we need to think as an industry about industry-wide standards, whether that's led by government regulators, whether that's led by trade groups. I don't know. But we need to think now, rather than have a series of mixed messages sent to consumers where, well, you fly brand X, you're safe, brand Y, you're putting your life at risk. It needs to be common.
Sash or Ron?
I'll just step in. Leaving the center aisle vacant, no airline that I am aware of in the world can make money with a load factor of 66% minus. And, Ryanair have been very clear, if center aisles have to be kept vacant, they're just not going to fly. Now, that's probably Michael O'Leary picking a fight, which he's incredibly good at, but he's also talking reality. If anybody who's traveled on European flag carriers in the last probably 10 years, the idea that you have this center aisle seat that's conveniently free, that's not been the case either. They've all been packing them in. Load factors for everybody have been 80% plus. So that's not even enough to get airlines in the air again, because they won't fly if they can't make decent money. And looking at some of these astonishing designs for safe seating. I think you sent around earlier on the Avio Interiors one, where the center aisle seat is facing in a different direction and is effectively enclosed in a sort of plastic casing. It's lovely and innovative. I just can't see how you can get the right seat pitch with that. And anybody who has got that central seat is not going to pay full price for that either. So you're just going to increase the sort of the passenger pushback. Plus, what airline is going to want to re-equip all of their seating to put these astonishing designs of central seating in? So I fear in the short term, until we get a vaccine, it's going to be everybody's masked up, gloved up, and stays that way for the whole flight. In which case, 80% of people just aren't going to want to fly. It's a really unpleasant way to fly, even medium haul, let alone long haul.
Ron?
Yeah, like I would add, I mean, like Sash, I agree with Sash 100%. Those are innovative seating concepts, and I don't want to put them down. However, you're in a pressurized vessel. It's a capsule. And it would seem to me nearly impossible to try to, one passenger in one part of the plane and their breath, if you will, travels all over the plane, almost independent of what you try to do. So I don't mean to be Debbie Downer, but when you look at how aviation works, civil aviation, large commercial civil aviation and social distancing are just not, they just don't mix. It's oil and water, right? I mean, it's just how it is, right? So ultimately, it has to be an epidemiological solution. I don't think you can really solve it on the plane. Sadly, I wish you could. I hope I'm wrong, right? I mean, it would be nice if I'm wrong, or if an epidemiological solution comes along quickly. But ultimately, it does seem like you got to go down the path of the medical science, just because of the nature. It's a little tube. Right. We're all stuffed in it, right? And so it's just the way it goes.
And now a word from our sponsor. The Defense and Aerospace Report is brought to you by the Bell V-280 Valor, bringing the mission technology of the future to the battlefield of today. Visit bellflight.com for more. What does a bounce back look like? I mean, right? So what is the more realistic expectation, even if you want, dare say percentage-wise, where we end up? Because I can't imagine, I think most people can't imagine wearing a mask for a couple of hours, much less on an extremely long haul flight, right? I mean, so there are people who can do it, and there may be cultural comfort levels, and maybe we can all get there and people design better masks at the end of the day. But what is your guys' sort of guess? Like, what does your gut tell you about where we're likely to end up?
I think we've got 2 years of, a situation driven by, as Ron says, epidemiological factors. Hopefully in 2 years, we'll have a vaccine or some combination of drugs or whatever. But in the 2 years since, you just can't expect too much. It's very unrealistic for someone like Michael O'Leary to say, nope, got to have 100% load factors. Okay, fine, don't fly, go out of business. Until that point where we have that vaccine ready, all kinds of unpleasant solutions need to be complicated, whether it's masks or empty metal seats or lots more aisle pitch or row pitch or whatever. All of these things need to be on the table, no matter how unpleasant. So we're going to have a difficult, unprofitable march back from 95% off of traffic over the next 2 years. It's going to be hard. And this gets back to the whole issue of, are people being realistic about this V-shaped recovery? And I really don't think they are. And unfortunately, I think even the government relief packages that have been posited for airlines assume a brutal 3 or 4 months followed by, there's that V-shaped snapback. And I think everyone is looking at it this way. This needs to be very simply a marathon rather than a sprint.
I want to add, and I agree with Richard's comments. In our financial models, our baseline assumption that goes across everything we do that's touching commercial aerospace is that we don't get back to 2019 traffic levels globally until 2023. And that might be optimistic, honestly. I hope it's conservative and, it goes, it's 2022, but that's our baseline, and that's what's factored in everything across the board. So, and if you do that, let's be clear, get back to 2019 levels by 2023, that's still a pretty rip-roaring recovery, right? I mean, your growth in air traffic year over year off of where we are, your growth in the aftermarket with where you are, is still pretty darn robust. The other factor that we do factor in is, as air traffic went down, your aftermarket goes down at a multiple that's greater than 1 times that, and when you recover, your aftermarket will lag that, largely because of the airlines preserving cash, pushing out maintenance intervals into the kind of their regulatory limits, that sort of thing. So, and that's the baseline for pretty much everything we do.
Yeah, I mean, I think Richard and Ron have nailed it. We've got to stop using the terms bounce back. It's not going to be a bounce. We've got to stop using terms like snapback. And companies that do have got to be called out on it, because they are deluding either themselves or their stakeholders and their investors. Neither of those is pretty.
I mean, a lot of people go out of business in this, don't they? I mean, doesn't the industry completely look differently, potentially, from an air carrier standpoint and even from a supplier base, if we're talking about something that's that low for that long?
We started talking about this a couple of weeks ago. Part of the really brutal triage process, in our view, is certainly outside the US, if you're not a flag carrier, you're vulnerable, because governments will only be able to protect one carrier nationally. So the flag carriers will probably survive, although they will survive as much smaller organizations. But the second tier carriers and the carriers with no real nationality, Norwegian, for example, are going to find life very, very difficult. And Richard just highlighted, there's not a lot of love lost for Ryanair. So if Ryanair want to play hardball about keeping the middle aisle free, I can't see many European governments saying, oh dear, we'll bend over backwards to make it easier for you. So I think, flag carriers survive outside the US, and the rest are vulnerable.
I'll jump in. Quite simply, right? If just based on our modeling, and again, it's modeling, if you don't get back to 2019 levels until 2023, you don't need any growth until 2023. And in the industry, roughly speaking, about 50% of deliveries are replacement and about 50% of deliveries are growth. Rough numbers. That means half the deliveries that we thought were going to happen between 2019 and 2023 before don't need to happen. So from an OE perspective, you're in a sense going to cut it in half between now and 2023. That's a big restructure, if you will. So it's a different structure of the industry. It'll be, as Sass said, much smaller.
Yeah, I agree completely. There's this issue with a bunch of carriers just not being in existence. I'm not really sure how the answer to O'Leary could be anything more than your terms are acceptable. Don't fly. It's just sort of bizarre. And in terms of what's coming down the pike, people have been saying, well, worst case scenario, we only have replacement demand. Okay, well, we can ramp up to 1,000 retirements per year, maybe 1,100. That's not bad. At least the OEMs can still build that. But I'm not so sure why they would if the system next year and in 2022 is so much smaller than it was in 2019. I would think you'd be building down, right? So where the production plans that were announced this week by Boeing and the production plans announced the previous couple of weeks at Airbus are coming from for next year, it just seems extremely unlikely to me.
Ron, talk to us about the group Textron. Obviously reported, we should point out, Textron is the parent company of Bell. Northrop Grumman reported, General Dynamics reported, Thales and MTU also reported. And Sash, I want to get your take on that. GD also had a little bit of news. They were down, right? Northrop had a strong quarter. Sales were up 5%. EPS was up 2%. Honeywell was also strong, but GD was down 5.5%, and Textron was down 11%. Those were both revenue numbers. Talk to us about how the group fared and what message there might have been wrapped in GD about business jets.
Yeah, when you look at the Northrop results and GD Defense and Textron's defense results, it's the same message that the defense industry is faring quite well, and the impact of the pandemic on the defense companies has been limited, and largely limited to work disruptions and things of that nature. That the end market itself is very robust, and in fact, all the companies have said they've seen contracting rates increase. And we've heard from the DoD side of things that the DoD itself is trying to increase contracting velocity to get more contracts in the supply base to for the primes to push it down to their suppliers to try to induce some stability, particularly with the smaller suppliers that might be more vulnerable because of the slowdown in commercial aviation. And that was consistent across all the defense guys. On the business jet front, it was a little more mixed. General Dynamics, Gulfstream quarter reported, and their revenues were down in aerospace. I think the revenues were down about 25%, and that was largely because of aircraft that were completed and just couldn't get delivered because people couldn't get there to get their airplanes. But the interesting thing was the number of cancellations and deferrals that they saw was actually quite limited, and that was surprising. In fact, we heard the same narrative from Embraer that the number of cancellations they've seen has been very limited, small single-digit numbers. Although it was a little different for Textron, and I think this is what kind of knocked the shares on Textron. That a substantial customer partner for Textron Aviation Cessna is NetJets, and NetJets had a substantial cancellation. If memory serves me right, I think they canceled on the order of about 50 airplanes, and then that was a surprise. So Textron seemed to be through its relationship with a larger jet share provider, a little more vulnerable to the situation. But that being said, just come to think of it, Embraer has a relationship with share folks, and as does Gulfstream. But just so happens, at least so far, and who knows, maybe it'll change for the other two, Textron seems to have picked the short stick, and that, I think, that impacted them. When you look at business jet traffic, if you will, as measured by takeoffs and landings and business jet cycles, it looks like in North America, business jet usage is down around 70%. It's actually down a little less than that in Europe. So it's not good. Clearly, being down, call it on average globally, maybe 60%, isn't a good thing, but it's still 30% better than civil aviation. So business aviation is being impacted negatively, but not as not to the same order of magnitude as commercial aviation.
Richard?
Yeah, this is going to be really interesting to watch because, of course, as Ron says, the only thing we're seeing right now is the disrupted process of taking business jets rather than the actual impact of the market on demand. Historically, there's a pretty close connection between oil prices and high-end large cabin business jet demand. And of course, oil prices have collapsed. Ron, I think you've had a very interesting chart that's spoken to that for years. I know we put out a similar one. And in other words, if the modeling is correct, we should see a hell of a crash in large cabin business jet demand starting next year. So far, that hasn't happened. That's going to be really interesting. Now, the small and mid stuff, I'm kind of cautiously optimistic because that market never recovered after the 2008 crash. Basically, the market fell by 57% in terms of dollar value of deliveries after 2008, never really recovered. It's a lot less frothy than it was in 2007. There's a lot less speculative buying, a lot less excessive finance, if you will. It's hopeful. We're hopeful that maybe that part of the market can hold up. And who knows, maybe business jets at the large size, the Gulfstream size, the Bombardier size, the Dassault size, will buck that historical correlation with fuel prices. We'll have to see.
Sash, why don't you give us your sense on biz jets, but also walk us through on Thales and MTU, because unfortunately we're running short on time, and I want to get your guys' defense views as well, because it's starting to crystallize government I want to get your defense views as well, because governments are starting to announce cutbacks, Malaysia, South Korea, and then also we've got to talk briefly about Fincantieri winning Fincantieri, and we've of course got to talk about Fincantieri Marinette Marine winning the U.S. Navy frigate competition. Go ahead, Sash.
Besides, the only point I'd make there is NetJets is a dreadful customer. They really are. They order big, they make everybody feel good for a while, and then they go out and cancel. I'm looking at Dassault's record with NetJets. NetJets placed a series of orders in the late 90s, early 2000s, 2006. They cancelled 2/3 of that in 2009 and another chunk in 2015. They're always pulling the rug out from under at least one of the bizjet companies that they favour. I think investors should put a big discount on any order from NetJets because the likelihood is it won't be delivered. Quick view on European earnings. MTU, they just don't know, and they're honest enough to say so. They have no idea where the market is ending at the moment. So they've got no financial guidance. What they were very good at was giving us at least a roadmap as to what the key issues are for the market to recover, and it ultimately comes down to the V word, vaccine. If there's a vaccine, the market recovers. If there isn't, it doesn't. And that was, very well laid out. Thales was very interesting. Here's a defense company, should be defensive, but isn't, or certainly wasn't in end of the first quarter and beginning of the second quarter. And the reason is that in Europe, social distancing has a real economic impact. If you have to work from home, it's harder to do very, very sensitive, secure stuff. And if you are working in an assembly factory or whatever, and you're having to keep 2 meters from the next worker, then you just work a whole lot slower. So Thales, first quarter was actually okay. Second quarter is going to be pretty much a wipeout. And I think we're going to see that from a number of other European companies, even those with the defense content as well.
Let's talk a little bit about defense and what we know now that we didn't know last week. As I mentioned, South Korea and Malaysia are among the countries that are announcing cuts. Even in the United States, the chairman of the House Armed Services Committee has come out and said the Defense Department can spare money that could go to pandemic relief a little bit in terms of when it comes to supplies and equipment. Any greater clarity on how global defense spending is going to be impacted on this in sort of a more empirical nature, as opposed to just saying, yeah, our gut says there's going to be an impact?
Now, I'll give you a very good example actually from the UK. Ben Wallace, the defence minister, was questioned by the House of Commons Defence Committee online rather than in person. Not only did he admit that the UK defence budget is in a mess, but he also acknowledged that if you have a defence budget that is implicitly tied to GDP, i.e. UK defence spending will be 2% of GDP, what goes up when GDP goes up comes down when GDP goes down. And there's a degree of panic inside the Ministry of Defence that the budget will be cut because GDP is going to be down. Now, there may be some special pleading there, and clearly a lot of spending in defence is long cycle, but it really does prove that gravity works for almost every single living creature and organisation on this earth.
Ron and Richard, any greater sense on impacts, including coming from the defence contractors themselves in their earnings disclosures?
I'll just point out that the South Korean defense budget announcement was also accompanied by discussion that they would be working hard to protect their indigenous programs, particularly KFX and KUH, the helicopter and the fighter program. Anyone looking for further evidence that there's, perhaps a move towards self-sufficiency and autarky in defense and away from globalization, there's another data point for you.
Ron?
On the calls this quarter, not a heck of a lot, to be honest with you. I mean, I think the sense was that they're just this increased contracting from the U.S. government, and they're all seeing that, right? So one of the worries that's kind of popped up in the investor community is if DoD continues to award contracts at the pace that they're at, do they run out of money this year? Is there going to be some sort of additional funds because they're ahead of schedule? Right? So that's one factor. One other discussion that came up on the Lockheed call last week was when you look at some of the international partners, Italy specifically, what's their capability going to be to take F-35s this year, so on and so forth. And I guess to Lockheed's credit, they basically said, we don't know. It just kind of depends how this all plays out. So, I don't think that the large defense contractors have, hidden or denied that there's some uncertainty in international markets, but they haven't, tried to put out a forecast or say what's going to happen, because at this point for them, or most anybody right now, it's really difficult to try to speculate.
And Fincantieri Marinette Marine, huge win in the U.S. Navy frigate competition, about $10 billion for 10 ships, beating out Austal, USA, GD, Navantia, and Huntington Ingalls Industries. U.S. Navy acquisition leaders in making the decision said that the baseline FREM design was so strong that once adapted to their requirements, worked really, really well as an anti-submarine warfare and multi-purpose frigate. It's a ship that's got a lot of growth room in it. Again, full disclosure, Fincantieri Marinette Marine is one of our sponsors, but HII has been one of our longtime sponsors as well. Very quickly, Sash and Ron, let's start with you. What is this a needle mover at all for any of the U.S. companies, given that Huntington Ingalls has lots of carrier, amphib, and destroyer work? GD's got a lot of destroyer work, and Austal was a relatively new entrant, but still will be building some littoral combat ship. What was your takeaway from the decision?
I don't think it impacted the equities all that much. Probably it's the biggest bummer for Huntington Ingalls, because that would have been a nice to have for them, honestly. And for General Dynamics, I think it was just I don't think it was a big focus of theirs. That's just my sense. It's nice to see that they're not going down the path of not invented here. That if there's a platform that looks like it'll work pretty well and they can modify it, good for them, right? I mean, that was hopefully a good cost-effective decision.
Sash.
So I don't wave the flags very often, but what this goes to show is if you want a frigate, you go to Europe. Europe builds better frigates than anywhere else in the world, because European companies, there's 5 countries in Europe that build frigates that are somewhere between very good and absolutely state of the art, and they've been doing so for half a century. And the only thing that I think is sad for both the UK, but probably even more for the US Navy, is that the BAE Systems Type 26 wasn't allowed to bid because it was not considered an in-service design. That would have given FREM a real run for its money. But the US Navy will have got a great frigate with FREM.
And do you think that this ship now becomes a potential competitor against the 26, which has had a very good run?
But it's been that for a decade. FREM and Type 26 have been competing. They competed for Canada. They competed for Australia. This doesn't change it. The issue is going to be then, is FREM competed out of Italy, out of France, or out of the US? Because it will have different specifications, different cost structures, different national support out of each. But no, it doesn't change the competition one iota. That's been here all along. Actually, the US is the Johnny-come-lately in terms of buying a frigate.
Everybody, thanks so much for joining us. Really appreciate it. See you next week.
Yeah, great to be here, Vago. Thanks.
Yeah, thanks, Vago.
Great to be here, Vago. Thank you.
And thanks for joining us. Please follow our daily interviews with top government, military, industry, and thought leaders at Defense and Aerospace Report, and subscribe to our weekly newsletter. Follow us on Twitter at DefAero Report. That's at DEFAERO Report. Like us on Facebook at Defense and Aerospace Report, and check us out on LinkedIn. Check out our weekly cyber report sponsored by Northrop Grumman. For more than 80 years, Bell has pushed past the boundaries of what's possible to drive aviation forward, going above and beyond flight, bellflight.com. Thanks again to Bell for their generous sponsorship, and we'll see you again tomorrow.